Welcome to Trading Lounge and the Asian Report, and we'll be covering the ASX, the Nifty, and we'll look at the Hang Seng as well, and a few stocks in the Australian sector as well. So with the ASX200 here, the current move up from the low here around Christmas time. It's pretty much the same as the European markets and the US markets as well. And with the US markets, and the European markets, we've been looking at a five-wave structure up through here. This market, when it pulled down here, it pulled down to the 61.8% of the last trend coming down from the last low. So that's significant, and we've also got a reasonable five-wave structure here, and we're looking at the last five here in terms of 1 and 2 and 3 and 4 and 5 up to here. So it is producing five waves. So in that case, we should see an A and a B and a C wave here, and then another move to the upside in a bullish fashion. The only bearish pattern that I can see is a weakness in this little area here. So when I count from wave 4 here down to wave 5 here, as I've mentioned when we were going through this, it's pretty damn ugly, and it's pretty much like it's in sort of three waves here in this particular space here. So one of the things that I was sort of thinking is that if there was a bearish picture, I need to sort of give it a bit more thought as well and have a look at a lot of the other sectors and stocks too to see what's going on here, because the ASX is basically pulled around by either the resource sector or the finance sector. If they're trending together, well, then this market produces nice patterns, but if they're pulling against each other, they can really distort the pattern. But the other side to this here is that I could look at this here as down for 1 and back for 2 and wave 3 here, and then 4 and then 5 here. So we have 5 waves to here. And then the other point would be, so if I can just grab this for a moment, I'm just shooting the breeze here, so don't throw tomatoes. If we look at this as 5 waves down to this point here, then we look at this here as an A wave here, a B wave in 3 waves, and then 5 waves for the C wave up here. And if we were looking for the 61.8%, well, then it would come in taking this top here, and I would take this low here. So putting it on this low roughly, and that brings us also into the 61.8% here. That's the correct way to do it. So so we're still in the ballpark of that weakness here. So it's not going to make a big difference really if you're trading this market. I mean, obviously trading other markets and things is based on this is going to cause a few problems, but also what we need to do here is we need to just basically stay with what we know and trade with what we know as well. So if we don't know the bigger structure of something, well, then we drill down to a degree of structure that we do understand. And it's not so much about do you trade on a 5-minute chart or a daily chart or a 4-hour chart and all the rest of it. It's the degree of structure that's more important. But in this case here, we're looking for 1 and 2 and 3 here and 4 here and one more little push up into here. So when we do get this push up here, this will be also in line with the US as well. Then we will be looking at the other markets around the world as well. We'll be looking at this moving down here, but we'll look at it as an A and a B and a C. But I also just want to not chuck a spanner in the works, but to be aware that there could be a bigger picture. We don't want to get, we trade what we know and what we see, but we don't want to get fixed on a particular count unless we're absolutely sure about it. So this could turn quite bearish from this point. That's what I want to say about this. It could move down past the 61.8%. So when we're trading down here, we'll take that on board, on consideration, and we will, talk about sort of adding a few more contracts here and there and so on at certain times, just in case it does move down further than expected. And this also produces a sort of a head and shoulder thing as well. But if we look at that trend moving up there, this is not the thing here. I'm just going to go to the XJO here, and I'm also going to go to the I think I'll just go to the quarterly chart. No, I'll go to the monthly chart. Just just what I want to do here is just, basically the volume creates the price. So volume, what we could look at the situation is that the price is 50% of the game and the volume is the other 50%. So for a trend to be a trend, it needs to have increasing volume. That could be to the upside or to the downside. Yeah, it's not difficult to read reading price and volume together. You don't need indicators. But what I just want to point out here is that the current move up through here is, as it moves up in each bar here, is getting less and less volume here. Of course, we're only halfway through the month here, so this might might come up further, but it's something that we can keep an eye on at this stage. But what we're seeing here is we're not seeing increasing volume to the upside here. So this is basically divergence here, and that's where you'll pick it up in the indicators and so on. So I just wanted to point that out. The other thing I want to point out too is that the 62 here is really important in terms of geometry. So you know that I use Fibonacci as a price ratio. So 62 would be the 61.8%. So if we went to a weekly chart, we would see that play out in more detail here. So yeah, so pushing to the upside here, that would be the that would be the catalyst for the hammer to hit down on the resistance here for that purpose. It never really, even though it traded higher, it never really came and sat. It never got supported there properly. It didn't hold. It tried. It moved above, but on the retest, it came down through the retest, failed the retest. So using that line here is what we'll be able to use over there. So let's just go in and have a look at this anyway. I'm beating around the bush here, but in a bit of a nutshell, to the upside, we can view it like this here in terms of wave 1 and 2 and wave 3 here. I'm not quite happy with wave 3 because there's an extra little wave in here. But yeah, something not quite right in there. But this seems to be panning out quite okay here as 1 and 2 and 3 and 4 here, and moving up for 5 here. So let's just go and have a look at that on the hourly chart here. So last time we spoke about this here, we were looking to go long if we had, a move above the 6-1 here, but it's just drift. Well, in fact, it was over here, I think. And I was looking at this being 1, 2, 3, 4, 5 here, but then we've got this one and we've got move down here. So this is really an A wave and a B wave and a C wave here for wave B. So I'm supposed to count 5 waves in this little space here. I can't do that. It's just a little bit messy. So what could occur here is the banks are a bit heavy on, as you know. So this this could drop lower from here, but we don't want to go long while we're below group 2 here. So group 2, as you know, is 65, 72 and 80. So we want to be long above that. So we're expecting the US markets to push up. We're by the pattern of this, we can expect this to push up, but you would need the 72 here as the support. Okay, and then you can bring the thing in onto that. And also too, being Friday, so the bullish weekly cycle that we track, so Thursday being bearish and Friday and Monday being bullish. So yeah, that 6,072 is a trigger to the long side there. And we've still got, if I can just come back to the trading levels charting program here, if we look at the banking sector, the XXJ for a moment, because we were looking, this is just a weekly chart here, it's okay though. We were looking, I'll put it on daily, a bit easier. So we were looking, what I'd figured with the banking sector is that the resources bullish and the banking sector bearish. That's what I was thinking, even though that basically the resources have been pushing up, and of course this has been pushing up as well here. But the problem with this, as I mentioned before, is that this first move up, this first leg here, it appears to be corrective as an A wave here, a B wave here, and 5 waves in a C wave here. So if this is corrective, whatever happens over here is going to be corrective. So I was first thinking of an A wave, a little ABC here for the B wave, pulling back to 50-60%, and then 5 waves moving up here to this top here. So I was suggesting that we've got a top in play here. We were short in ANZ and WBC, but I pulled out of those because of the S&P pushing higher. So I thought we might get trapped in there, so we got out at break even or small profit or whatever it may have been for each of us. But CBA's dropped quite nicely here with all of this here. So its correction is a little bit different really, because it started much earlier through here, but also too we've had this as an A wave and a B wave and a C wave, and picking this top here as well. It has gapped away on us here, but we've still got ANZ here. If I look at ANZ here, this is more sort of in line. See, the other reason I got it is that this, even though I looked at this being an A and a B and a C to this point here, and will come down from here, this started to look, on the intraday basis, started to look corrective here. So what we can do, we can put a short trade under here. So let's just have a little look here. We'll just use a bit of logic. This is a weekly chart, so we could put a short position 1 point under here, and if it gets triggered, fine, we're on our way and we'll put our stop back up here and so on, and we'll be safe that way. So it was better to get out and then get back in this instance, in my humble opinion. It's just tactics. You know, if you're a right brain person, then you need to have you know, you need to be more mechanical in your trading approach to keep you safe in a way. And WBC is the same as well. So let's just have a little look at that from here. The same thing can go here as well. Here, when we look at the resource sector, and I'll just go to BHP as crude was up today, we can see that from BHP here that we know that this move down here is corrective here as an ABC. We know that Rio didn't make a new low on this leg here. It's a little bit higher, but with the same with Rio, we have to look at it as an ABC here, even though it didn't become lower. But then we can look at this as wave 1 and wave 2 here, and wave 3 moving up through here. So this has got further this trend has got further to move up through here. So we're going to see the banking sector, the XJO basically being, if the other banks, ANZ and Westpac and CBA tend to move down further, then and this stock here push up higher, then the ASX is going to be, you know, pulled around a lot, which it basically has been. This is the kind of price action that you get to see when those two fight each other, the resources and the banking sector. So it's kind of important, you know, if you're trading this market, to know where the banks are, know where the resources are. You know, you can go back further into the Australian dollar and the yen carry trade, because that's where that power comes from. In that sense there as well. So anyway, that's that. So realistically here, let's just say that I was wrong here. We're not going to push up. Then you could short below this little low in here. But how far you would come down, I don't know. But the S&P 500 still got another session or two to the upside. And all we'd be looking here is for 5 waves to the upside. I don't know if it's going to reach up to 6.2. It will depend on what the banks do. Okay, if the banks pop up, well then fine, we can move up. But there's going to be a lot of resistance at the 50 here. So what I might even do here is just bring these down into this space here as such. Bring that up into the 50. That's where the real resistance going to be, and you'll see that on the daily chart too. There's a lot of high opening closes in that space, so I'll just put that there. Don't want to get your hopes up. Okay, so let's look at I want to have a look at the Hang Seng today, because there's a bit of a change in this. So what I was doing here with the Hang Seng is that I was looking this move down here as wave 3 or wave C. They've got wave B here, so it would be wave C here. So if this was going to be wave 4 here, then it would pull back to this little guy here, the wave 4 of 1 lesser degree here, okay? But it does appear to be moving higher. So if I look to the daily chart here for a moment, oops, a daisy. Just to explain this here. So I'd looked at this down here as wave 1 or wave 2 here, and then that would make all this down here for wave 3, the alternative wave 3 here, or wave C here. So that's okay, but that means that if I take this top here as a wave 3 coming down here to that low here, the 38.2% retracement level is here. Not that that's a big deal, because I find that the wave 4 of 1 lesser degree is more important, and it's more important because of that's where the volume has been sitting before. That's where the battlefield was, not so much in this ratio. Not that it's a big deal. I mean, 40% and 50% here, so it still could be a wave 4, and we're still in that wave 4 block here. But if this pushes up too much higher here, we'll have to look at this whole move down through here as an ABC pattern down through to here. So I'm not quite sure yet. What we need to do is just focus in on this trend here being 5 waves. It is corrective, because the situation here is that this is the low. This move here is in 3 waves here. It's corrective here. I think China made a new low on this one here, so that made a new spanner in the works. But at the same time, this is also part of the Christmas run here as well, isn't it? So once again, these 5 waves up here, I'll just go to the hourly chart here for this. So we can really consider this the same as the US markets, and obviously Hong Kong, China, the US, there's trade talks going on at the moment. So with this here, we've been counting it before as wave 1 and 2. It's the same impulse wave as all the other indices, not all the other indices, but certainly the US and Australia. So this little move up through here is probably the 5 wave structure as well. So this move here would be a little A wave, B wave, and C wave. Here it looks like the low's in place, but I can count that here would have 1 and 2 and 3 and 4 and 5 here, so there could be one more low here. So anyway, the long trade would be above 28.4 here, and don't expect too much of it. So perhaps to the we'll be going above here, and the natural thing to be looking at would be the 28.8 here, but the previous number here, the 28.650, is the catalyst. I'll put that there. That would be the first one that you'd be looking at that point there. You could also add to this too on 28,500 here. So once that becomes the support at 500, you can look to add to that position there, but not expecting too much out of this particular trend. And India. So with India, we've got, as you know, I have to go back over this again, but wave 3 here, an A wave here, a B wave up here, and a C wave here for wave 4. The problem with that's quite a nice expanded flat pattern. The problem with that is that this move up through here doesn't really display the perfect impulse wave. It's got lots of overlapping wave structures in here. They can be a bullish structure, but we weren't going to turn bullish unless this is the 61.8% mark here, 50-60. If we found support on 11,000, well, then we turn bullish. It's as simple as that. Otherwise, we need to look on the bearish side for this. So let's go in and have a look at this here. So on the bearish side, we've got this situation here, where if I bring it back in here from the low over here, we've got the A wave, the B wave in blue, and coming up here for wave B, or it can also be wave 2 here as well, as you may know. So what we were looking for is we had 5 waves moving up through here, and if it was going to be bullish, then it would pull back to the 61.8% mark, which is roughly around here, and then move up from that point. Well, it hasn't moved up from that point here, so this move down through here, we need it. It's not, I mean, this can still be an ABC in here, but you know, it's moved lower than expected, so we're probably on the bearish side with this. So I was thinking that if we go to the well, I'll just stay here for a second. So this move down through here, I think that we've got one more little move down through here, then we've got the ABC. It kind of doesn't matter really at this stage, because what we want to do is we want the first 5 waves down here to complete. This will be the support down here. That will be at 10,650 here. That's halfway between the Fibonacci numbers 5 and 8. So it's important, but we can see that it's important over here from history now. So what we want is we want to see this market have its first low in place now, and then move back up here, and then we can look to short in a variety of ways like through here and so on. The move down through here, let's just go into the hourly chart and have a look at that. So this was the 61.8% mark here, and we were talking about if this market finds the 61.8% mark as the resistance, which it has done, then we can be on the short side. So you may be short at the moment, and we can also look to add the next trade below the 10,650, so that's where the next short trade will be here. But I think that we're going to get a bounce off here, so I just want to go over this here. If this market moves down here and then bounces off here and then moves through here, that's not the time to short it. You have to wait for the retest to come back in, and then you can bring this across here, that segment there, and then you've got your setup on that side there, on this side here. So that would be the fail retest. So that's the setup on this side here. This move down through here, I think it looks better if we look at it on the actual physical market. So let me just find that. This is the picture here, so it's just a little bit easier to read sometimes. I like to look at the cash market, the futures and so on, so to try and find the cleanest count. So what I can see here is from the top up here, this is a 15-minute chart. From the top here, I can see 1, 2, 3, 4, and 5 here. So that's our first wave of wave 1 here. And then wave 2 here didn't pull back up and cover the gap up here, didn't pull back up 50-60% or anything, but that's wave 2, and then we can see a strong wave 3 moving down. So this wave 3 can be this low here, or it may even be this low over here, but I think it's probably this one. And then so we've got 1 and 2 and 3 here, and then a complicated 4th wave into this point here really, and then somehow we've got to get 5 waves from this high to this low here, in terms of something like 1 and 2 here, 3 here, ABC for 4, and down for 5 here for 1, and back for 2 here, and then the 3rd wave down here. So this is all 1 and 2, and nice 3rd wave down here, and this is a 4th wave pulling back, and then we've got another move down. So that's why I was thinking of the 10,650. Obviously the 700 is going to play a part as well. But what I'm saying is I don't think this 5-wave structure is finished here just yet. Okay, so just removing this now and coming back here, we're looking at, I mean, it looks different on this picture here, doesn't it? So yeah, it's just a bit different, but I think what we've actually got here is one more move down into this space, yeah, and the 700, there's a whole lot of important numbers here, but the 10,650 and the 10,7 here is what we want. But yeah, look, if we move down to this space here, then we don't need to do much, because then we'll be looking at an A and a B and a C wave into this space here, and then we'll be moving down from this point. So all we need to do then at that point here is, if I can just copy that here, we can make it a bit more sophisticated at the time, but we'd still have to, you know, the reason for putting this line through here is pretty much because the market would have broken down at that point. But you have to remember that this could also be wave 1 and wave 2, and then wave 1 or wave 3 and wave coming back and so on here. But still, it's normally a reasonably safe way to get it in here. You know, you can always track 5 waves in this little structure here as an A and a B and a C. It should be a quite simple zigzag because this is the first sequence to the downside in 5 waves. So an A and a B and a C in 5 waves. So you can short it after the 5th of the 5th of the 5th in here and look at what number, or you can get closer to it. This first leg that comes down here too will be in 5 waves, so you can also look for the ABC in this one here and also draw it across here as well. So you can edge closer, but the main point is that you just really want to get smaller positions into this, and as it builds down, you know, you take the longer term view, and the longer term view would be that, well, if it's moved down to here as this leg here, then the next leg here is going to be down here, so that's going to take us down to 10.5 at that stage. We'll also be looking for 5 waves, so it's probably the third wave, so we can add a bit extra. So the third wave will probably take us to 10,300, just roughly. I need to work it out, but so you know, when you think about it, getting a few positions in here, get a bit of pocket money on your side, and then start building into these ones here steady as she goes, and then we can also look at the bigger picture as well. So yeah, let's just play it out like that. Alrighty, that's it. Thanks for tuning in. Cheers.